Lululemon reports earnings on Thursday, March 26th. I'm here with Jack Moore, Director of Research for Action Alerts Plus, who believes this stock is a buy before we get those results. So, Jack, you've been buying shares of Lulu for the charitable trust. You picked up some last week after a Goldman Sachs analyst downgraded the stock to sell from neutral. What do you think the analyst has wrong?
Yeah, I think that the analyst, it cites competition, cites Canada, and weakness and all of these kind of structural issues that I just don't think are real issues. I think Canada, they have to address that, but that's such a small part of their business that you really have to focus on the brand in the US, and that's going well. I mean, everything that we're seeing, all of the metrics, all of the traffic metrics, the company itself said in January that its sales were tracking much higher than well above the industry. It's taking more market share. And so I think they're wrong on the competition part because I think it's rising above that, the competition. But I think they're also wrong on valuation because they say that it's overvalued, but for the growth it has, like 8% comparable store sales, I think will happen in this quarter. It's only trading at 30 times earnings. I mean, there are a lot of retailers trading at almost that amount and or more with half of the growth that they have. So I think it's a really compelling way to get into the stock off this 10% fall in shares.
Sure, and this upcoming earnings report will be significant. It'll be the first one for the company since its newest product. So being as you are still picking up shares, I know you picked up some today, how do you think those will have performed?
Well, I think they're going to come through well, and I really think you also have to look at it in comparison. Last year was like their worst quarter ever, the first quarter. So it was, the weather was terrible. I think they had some execution issues, operational issues, and they weren't seeing the traffic. But over the coming 12 months, they've completely transformed their business in a way that I think is going to drive outsized growth, outsized sales, outsized earnings, and I think that. I think the analyst community, especially after this downgrade, and the investors are so much more bearish heading into this quarter, and that's such a rare opportunity because they're almost always bullish heading into Lulu's quarter. So, I mean, it could be a huge beat, I think.
Well, and although the shares did take a hit on the Goldman downgrade, haven't really recovered since. They have been climbing for the past 6 months or so. So would you say any pullback is an opportunity? What do you think?
Yeah, I mean, they've had a pretty parabolic rise. And at one point, we were up 45% in the name. And then just recently, now it's only 25, 27%. And so we're looking at that spread differential. Nothing's really changed in the meantime besides the Goldman downgrade. I don't think one downgrade from an analyst that missed the 80% rise in shares when it said to sell is really that credible. So I actually think that it's a good time to buy right now. I think it might be your last opportunity to get in at a discount ahead of the quarter.
Great advice. Thank you so much. Jack Moore, Director of Research for Action Alerts Plus.
Thank you.
And I'm Brittany Umar for The Street.